Hey there, welcome to the video. I'm Scott Welsh, and we've got a really big title on this video this month. Remember, we get together at the first weekend of every new month to do a long-form educational video. And it seems like I'm doing clickbait, but I'm really not. So let's get into the video. This is the disclaimer. Of course, with a big title like I just mentioned, there's going to be a lot of numbers. These numbers are hypothetical, so immediately we're disappointed. Please do not risk any money you cannot afford to lose. Past performance does not indicate future results, and these are not live numbers. Okay, fair enough. Two things today. We're going to talk quite a bit about abundance versus scarcity. Okay, abundance. There's a big difference between these two mindsets, and probably this is all we should be talking about. But if you have an abundant mindset, it means you share ideas. It means you don't sit around in your miserly closet taking all the ideas and saying mine, mine, mine. It's not Scrooge McDuck, right? Now the problem is the king of the hill, Jim Simons, who runs his super ultra secret hedge fund, is not an abundance mindset. He assassinates anyone who talks about his strategies, will not give away any details, and it's mine, mine, mine. And he's done extremely well, averaging about 66% over multiple decades. That doesn't mean it's not true, though. That doesn't mean that abundance can't work. Just because a moron is number one in the world doesn't mean that's the only way to play tennis, right? If you know your tennis history, you know that there have been some awful players, people who didn't deserve it, and some awful human beings who definitely didn't deserve it, as the number one in any particular profession. That doesn't mean it's right. And just because Jim Simons is the only one we know that's scarcity mindseted, is that a word? Doesn't mean it's not right. Remember the Turtles, which are easily the greatest public example we've had. I mean, they averaged, what was it, about 100% per year for 4 years during the turtle experiment. That beats Jim Simons, although for a much shorter time period. And well, wait a second, they were secretive, but eventually they weren't, right? Eventually, these rules are now made public. So they started as scarcity and turned abundant. And guess what the creator of the program said? You know, honestly, it wouldn't have mattered. We could have shared our ideas. We could have printed them in the newspaper, and it would not have mattered because people wouldn't follow them. Well, this is an abundance video, and I'm an abundance person. I want to try to give away ideas, not hoard them for my own. What do I get out of it? I get a better world, maybe. I get a place where people aren't confused by long-term investing, or people do well. If people do well, it makes me happy. And what can I do personally, selfishly? Maybe you join the free email list. I mean, you could buy something from me someday, I guess, too. So the idea here is, though, be abundant, to share. I'll share with you, you share with other people. And let's see if we can make our long-term investing different. Let's see if we can change the culture. I told you I could have talked about it for an hour. Who is this video for, despite its catchy title? It's for people who want long-term solutions. This is not a get rich quick. It's a get rich slow. Okay? If you want short-term and you're clicking around, this video is not for you. This is for people who aren't damaged. I get so many emails from people who are so damaged. Scott, I've bought this over the years and it's all been a scam, and I invested in so many different trading robots and they're all a scam. They don't work. They weren't back tested. They're all black box. They're all fake. If you're too damaged, then you can't believe in anything. It's okay to be damaged. You were taken advantage of. I get it. Take a break. Do something else. Put your money in a T-bill. Something. Calm, right? But when you're not damaged, come back to this video, because we're going to try to talk about solutions, right? An abundance of solutions. This is for people who are tired of being scammed and interrupted. Hey, watch this video. Do you want to make 15, right? If you're tired of that, this video is for you. If you're tired of being hustled, I'm the opposite of that. That's why I do these videos. I'm the opposite. Look at my production value. It's just so plain and boring. Look at all the fun graphics. You're not supposed to put words on your screen if you're a great speaker, right? I'm not hustling. I'm trying to share. I'm trying to change the culture. That would make me very, very, very happy. Okay? But this video is for people who don't like to be interrupted and hustled, because it's my belief that nobody likes to be hustled. And I'm not hustling you. Okay? But here's the thing about learning sessions like this, whether it's a private lesson in a high-performance tennis court, or if it's a little seminar we're doing free on YouTube. And that is, as a coach, when we're talking about elite performance, at least 80% of my time was spent talking mindset. At least. I wasn't teaching forehands and backhands anymore. I was teaching mindset, how to handle adversity, how to not be afraid, how to not hide, how to put yourself on the hook and be okay, and how to deal with uncertainty. That's what I coached. 20% of my time is, okay, hit your forehand this way. Okay? Now, I got into tennis accidentally teaching mindset. Of course it mattered, but that's not what I studied. I only did the tactics. I only did the forehands and backhands. I thought I got good at it. But at the end, I realized it's not the most important thing. The mindset is way more important. So I spent 80% of my time on mind, spent 20% or less of my time on tactics and form and techniques, and I spent 100% of my time on culture. Tennis is a dog-eat-dog world. It's angry. It's rough. And I tried to create a world that was the opposite of that, where you could compete with someone and still be friends, where you could compete with someone and not cheat them on big points, where you could compete with someone and then go hang out afterwards, where you could do a clinic and try to help other people, where you could hit in someone else's lesson and give away your time and your skill to help a younger person or someone less skilled. That's what I spent 100% of my time on. Did it work? Yes, it was a wonderful world to live in, and I'm so happy for that time in my life when that's all I did. But keep that in mind. Culture beats strategy, period. Doesn't matter what your strategy is if the culture is dog eat dog. Doesn't matter what I say if you're going to cheat every single time. And it doesn't matter what this video says if you don't believe that anything can happen. If you don't believe that your own personal culture can be changed, right? There's your philosophy. Now let's get to some hypothetical numbers. This is where we're going. This is 4x, mind you. Hopefully you knew that by now. This is a 4x chart, okay, and 4x information. Pound, yen, 1 hour using the RSI, and here's where we're going. I am gonna give away the details, but using one lot since 2003 to 2021, here you go. It's a lot of profit with not a terrible amount of drawdown, especially if you use a bigger account, right? $20, $30, $40, $50,000 account, you can handle that. This drawdown is from the peak to valley. Obviously, I used a little bit bigger than a $20,000 drawdown. This number is kind of irrelevant because it depends on the account size, but we'll get into that later. This number is not irrelevant. This is a great number. This is how much it dipped below your original investment, because who cares if we take a $20,000 drawdown if we've already made $250,000? I mean, we'd care, but we wouldn't care. See what I'm saying? A lot of trades, so sample size seems significant to me. The profitable trades, dun, dun, dun. That was kind of weird. Profitable trades, only 12%. Now, that's a little bit misleading because this particular software takes break-even trades and adds them to losing trades and then keeps those apart. So these were the winning trades. Those are the break-even trades. If you count the times where you just made nothing, which to me is not a loss, and added that to the winning trades, then that percentage, winning quote-unquote percentage, would be much higher. But I never said it would be easy. I'm not promising you get rich quick. Here's the equity curve of what I just talked about. I mean, maybe we should just talk about this. If we're a long-term investor, isn't this what we want, right? I don't know of any stock market chart as far as the index fund that looks this smooth. Maybe a certain time period did, but I doubt it. Look at that. Diagonal from left to right. We have changed our financial lives forever. Oh, this is a problem. Look at this. No new highs for a long time. And then a real quick new high. Drawdown, 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 drawdowns everywhere. Boom, big drawdown here. Oh, drawdown right here. Okay. So no, it's not easy. But look at the left to right. I mean, isn't that what we want? And how do we get there? Culture, long-term investing. Okay? Now, obviously, we don't have to be creative with this. We could just do what, I mean, we don't need to talk about this at all. Why don't we just do what everyone else does and do a stock market index fund, just buy and hold, and that'd be it? Well, I could do that, but that's boring, right? And it's not only boring, it's not even that great of an idea. Instead, I'm going to show you something creative. And here's the definition of creative that I live by. It's the generous act, generous, abundance, not holding it to myself, but giving away, giving ideas, giving help. Generous act of solving an interesting problem. To me, what is more interesting than changing your financial life forever? It's the most interesting problem out there. I know there are plenty of other ones like disease, called solving disease. I get that. But assuming all that other really, really serious stuff is taken care of, this is a very interesting problem on how to create more personal wealth. So being generous on an interesting problem on behalf of someone else. That's what creative means. Trying to make something better by making something better than an index fund. So that's what I'm trying to do. That's why I make these videos. I'm trying to come up with something creative that we all can use to change things, to change the culture, to change the way we invest, to have more money. Now, the thing about being creative, if you're making something new, it might not work. This stuff I talk about might not work. I'm doing everything I can to have it work, right? Watching it walk forward, trading it with my own money. But it might not work. That's what creative is. You make something new, they might hate your song. They might hate everything you do, or they might love it. That's part of being creative. Okay, that's why we're here. Research may not work. We're going to talk about that. But probably more importantly, we may not even be able to do it. Even if everything we're talking about is legitimate, we may not be able to do it. This probably isn't too complicated for you, but here's the entry. We're using indicators. When they go to extreme, we get in, and this is what happens. Hopefully, it starts a trend and it runs. We're going to talk more about entries in a second. Here's an easier thing to look at. RSI is extreme. We get in, and that one broke even. Hey, it went our way and then did nothing. Here's this dipped below extreme. I didn't put an arrow by it, and then it went short. So those are a couple of entries. The second one's easier to see. Pound yen 1 hour chart on the MT4 platform. Okay, here you go. Here are the settings. Generous, abundant. The target long is 1,200 pips. Now, this is basically a quote-unquote emergency exit. This is for, I mean, come on. It's gone 1,200 pips. Am I really not going to take this profit? You could make this 10,000 and it would never hit it. And as it stands, it hardly ever hits it. But if it goes 1,200 pips, isn't it okay if we take that in emergency? It's probably not going to go 1,200 more, right? Anyway, I programmed so it took it. And for shorts, I took it at 950. In an extreme emergency situation, I said that's enough. Compare that to the stop loss. Look at that. Pretty tiny, especially for the pound yen. We're going to break even at 70 pips. If it goes 70 our way and comes back, you saw it on the screen, we're just going to take it out and move on. We're going to use the RSI in a different way, of course, but the length is 11 on what I just showed you. Default is 14. This is just slightly faster than that. Overbought and oversold is typical default 70-30. Now, we are using a time exit, and you'd be shocked at how many great traders use time exits and do very, very well. Vastly underrated. Just get out when it's been in for a while. Instruments, Forex specifically, run for a little bit, and then they just stop, right? They just stop. If you use a time exit, you don't necessarily limit the upside except for a tremendous upside, which is what we're doing here. So this is about 3 trading weeks. So in other words, I told you it was long term. It's about 3 trading weeks. You're going to be in for long trades and about 2 trading weeks for short trades. Why would this even work? Well, we're following the trend, right? And trends are the most researched, most proven, longest running trading strategies on earth. Trends are. Trend following in specific. Just follow a trend if you want to make money. I've been searching for many, many years to try to find one thing that you could say. In tennis, there are one or two things you can say in your first lesson and they can work for the rest of your life. Why isn't trading that way? Well, trading might be that way. If you just follow a trend, that might be the one thing. And research is making that more and more clear by the day. But here's the promise that trend following gives us. It won't always work, but it always works. Wait a second. What? What does that mean? It means it's not going to be profitable all the time. 12% win rate, right? But in the end, the long term, it always works. That's what trend following promises us. Doesn't mean it's true. There are ways to follow the trends and do poorly, probably, right? Maybe I should do a video and do a poorly researched. No. So how do we follow trends? If all of that is true, if we believe in the promise, if we believe in the eternal nature of trends, well, how are we going to do it? Well, we could use price action. That's what the turtles did. That's what most traders love. I don't mind it myself. An example of this is break out above a recent high or a recent low. And that's fine. But why not use an indicator? Why can't we? Why can't we use an indicator to tell us when a big trend might be coming? Why not? Well, we're going to, but we're going to do the opposite, as you saw in the example. We're not going to use indicators like most people do. When the indicator goes overbought, we're not going to bet that it goes down. Oh, it's overbought. Therefore, it must revert back to the mean. Nothing wrong with strategies like that. Well, there are a few things wrong with strategies like that, but they're usable, is my point. But we're going to do the opposite. When this goes extreme, when it's overbought, that means something's going on. Let's get involved. Let's go with the momentum. So when our strategy goes above overbought, we buy. You can see that on the screen. Strategy goes above, and there we go. Now, do we ignore all these other signals? Absolutely. Does that freak you out? I'm sorry. I don't know what to tell you. Yes, there are contrary signals, but once we get one, right, we're just going to go with it. Might not work. Creativity means it might not work. But this one did, and I showed you an example of that. We don't want just any trend, and price action is kind of like just any old trend, right? If it's above the 50-day high, tell me about that 50-day high. Well, there's nothing to tell. It's just above the 50-day high. Whereas an extreme reading on an indicator means something. It means mathematically there's momentum or there's volatility or there's something extreme going on. Yes, if it's a false signal, it might revert to the mean. If it's a weak trend, yeah, it goes overbought, it might come back down. I get it. But do you remember the warnings about RSI? The people who say don't use indicators say, well, look, bam, bam, bam. It can remain oversold for a long time. It doesn't have to revert. Well, that complaint we're turning into our strategy. Yes, it might stay oversold or overbought for a while. That's great. Let's use that. But of course, it might not work. This free video on a free system may not work at all. For one, my numbers are fraudulent. This is just a fraudulent backtest based on nothing, right? I optimize with bad data using bad fundamentals and bad stats. Could be. Or it's not a fraudulent backtest, but I over-optimized. I mean, you saw that. I have different settings for long and short. Can't do that. Maybe I over-optimized, and that would be the death of this particular strategy. Maybe I didn't put trade costs in there. I won't say most. There are many, many things out there that don't put trading costs in. You know what happens when you don't put trading costs in? Winning strategies can turn into losing strategies, and the person who sold you that can say, hey, it wasn't my fault. I don't know what your trading costs are. Buy something else. But if you do put trading costs in, then obviously we can have a conversation. The pound yen can stop trending, right? The pound yen trends. It's trended for 18 years. Is it going to stop? Maybe. Does that make sense, though? Apple's been trending since 2004. If you follow the trend on Apple still in 2021, you can still get massive trends and massive returns, 50%, 100%, 75% a year, following trends on Apple. It's 18, 17, 18, 19 years later on Apple. When is Apple going to stop trending? Tomorrow? When is Apple... If you find something that really trends and trends for 2 decades, It's going to stop trending. Does that make any sense? Well, some people say it does make sense. Some people say, so things stop trending forever. And I guess they do, but does it make sense to you? Or the time exit becomes too long. Maybe I'm 2 weeks, 3 weeks. Maybe that's too long. Maybe it should be 1 week. That could happen. That could happen and screw up the strategy. So there are all sorts of things that might go wrong. Or we could try not to fall asleep in the getaway car, meaning the caper is over, the bank is successfully robbed, all we have to do is drive the car and we're free, and we fell asleep. In other words, we have something that works and we sabotage it. We could do that. In fact, that's the 80%, remember? That is why strategies don't work. So assuming I do have trading costs and it does keep trending and all those things, I'm not fraudulent. How could it fail? If you don't have a long-term trading horizon, this will fail. You saw the chart. There are flat times, there are drawdowns. If you can't take it, if you have the wrong culture, meaning your culture is dog eat dog, I only care about next week's trades, this won't even come close to working, right? If you can't take losing trades, no way. If you need to win all the time, if that's what trading is to you, no, it won't work. You can't take losing months, this is not for you. If you can't take losing years, then you definitely, this isn't for you. So it will not work, period. And along those lines, here we go. Here are the annual returns for that strategy. Oh, losing. Now this is massive. If you used a 30,000 account, you'd have a 100% year. If you use a 30,000 hypothetical account, over 50%, over 50%, over 50, over 50. Look at all these 50 to 100% years. Oh, and look at the red. If your culture is, I'm going to ride this particular trend following instrument as long as possible and follow those trends, this is nothing. Oh, it didn't trend this year. Oh, it really didn't trend, or it trended up and down, up and down, up and down. Trend following systems don't like quick turnarounds. They like long moving trends. If you can't handle these, if all these 50% winning years and 100% potentially winning years, if you don't get those, maybe you get this one first, maybe you're out the door. Although it is up a little bit according to the data in 2021. Never make it though. Does this strategy quote unquote work? Better believe it. Will we make it? Remains to be seen. And this is where the culture kicks in. People accept losing years in the stock market, don't they? People like the Mr. Money Mustache, they love it when the stock market goes down. They love to get on and preach. You gotta stay in when the market goes down. They even sing it. It's their little market song. People like Warren Buffett trade when there's blood in the streets. I mean, they get frothy excited when the market goes down. That's their culture. Buy more. Their eyes light up in 2008. Well, that's weird. How come we hate any single losing trade, and that's our culture, but stock market index funders love losing years? Hey, it just means buy more. Dollar cost averaging. Isn't that weird? The best mutual funds on the planet in the past 15 years, losing years. And you know what they'd say at their little parties, or their get-togethers? I got the best mutual fund. It's the #1 mutual fund in 15 years, man. Or woman. Oh, did you have losing years? Oh, yeah, I had losing years. But I'm #1. I've averaged 17% per year for 15 years. I mean, you can get rich on that. But you definitely have losing years, and they wouldn't bat an eye. But this trader community culture is like, now. I don't have any money. I have $4 to my name, but I need something now to make 1,000,000%. Like, culture problem, right? Come on now. And the housing market. The best investment you can make is real estate in your house. Housing market has losing years all the time. Not right now, as I said here, talked to you in 2021. But I bought a condo in 2007 and didn't make money on it for a decade. I mean, I was underwater for mostly a decade. How's that for a drawdown? And when you have a house, you worry about drawdown? I mean, almost never, right? Culture. House goes down, but it'll go up in the end. You don't even sweat it. But trading systems, we sweat it? Really? It's crazy, right? Unfathomable. All right. Here's what we saw on these charts. Here's what we're talking about. we already mentioned it, 50% years, depending on if you use, if you use 20 or 50K. 100% winning year if you use a smaller account. You just have to live with patience to get there. In trading, we would have to know it's coming back around, like the stock market zealots, like the retire early zealots, like the housing market zealots, like the crypto. You think crypto people care about dips? They love them. Crypto people love it when things go into drawdown. And they're brand new to the scene, right? Relatively speaking. How come they love it and traders don't? How come? And this is what happens when we compound. We're getting to our hype in the title. If we compounded this, meaning if our account goes up, we increase our trade size, and the account goes down, we decrease. We'd start with 50,000-ish, okay, 30,000 maybe, anywhere in that range. We'd end up with 921,000. I'm going to show you an example later, but this is where you can see all the other stats are about the same, or nearly the same, or exactly the same. Profit factor still good. Drawdown really didn't get crazy, but our little tiny whatever account turned into almost $1 million if you compound. Now, how are you going to survive drawdowns if you compound? It's going to take the right culture, and that's what it looks like. Whoa, look at this. A $240,000 winning year. You started with a modest account that you scraped together, and now you're making $240,000 a year salary. Woo! Oh no, look at this. Wow. $200,000 losing year. Now, we've already made all this money, right? $180,000, $180,000, $180,000. I mean, we weren't just getting $200,000 in a year once. We got it multiple times, but look at those losing years. Okay? Moving on. Well, that's good enough, right? You have a system and you have the mentality. Is there anything else we can do? Well, it's a long form video, so yes, of course, we could add another chart. And we're going to choose breakouts, even though it's correlated, allegedly. We're going to use another breakout system, and we're going to add a different indicator. Are you ready? Bands, volatility bands, also known as Bollinger Bands, trademark, on the screen. You can see that sometimes it enters when it breaks the band, and sometimes it doesn't. So we have multiple things going on in this particular strategy. It's simple, and it is different. We're still trading breakouts, but we're adding more opportunities. We're going to enter on a close above or below our band, or our RSI entry. Either or, not and. Doesn't have to be both. You saw that. One or the other. Okay? One or the other. And what this gives us is now we have breakouts on volatility, because bands are how volatile is it? Well, if it gets more volatile, they get wider. If it gets less volatile, they get shorter. So if we break above the band, we're breaking out of what's been the volatility range. That means something. Let's go. But we're also doing momentum, because RSI is basically a measure of how fast the stuff is moving, relative strength. So we're getting in if either one of those is happening. And it gives us more opportunities. And we're also going to change to a larger chart. We want these signals to matter a little more. Diversification, right? And so we're using a 4-hour chart. Okay, this is some examples from 2021. You can see that here the RSI barely went up into overbought, and we got in. Here is when they both actually were activated. You could have done either entry. We're below the band, and we're below here and oversold. And here the RSI triggered, went here. So it could be either one. Got it? Clearly this is only an RSI entry. It wasn't above the band. Here's the performance. Now we're using a hypothetical 50K account. Okay, the others used anywhere between 30 and 50. From this point on, we're only considering 50K in our hypothetical account. We're trading one lot from 2003 to 2021. It makes a little more money. Profit factor still good. Here's the drawdown on a 50K account. Here's the actual drawdown number. Very, very similar. Trades, not as many. We expected that. Win percentage, a little bit better, right? Because we don't have any break-even trades. So I think the other one, when you add these two, is very, very similar, if not more compatible. But a 34% win rate is not much, but obviously it's decent. It's livable. Okay? That's a lot of money, though, right? For long term. And here are the settings. You ready? I created this, by the way, with my Master Trend robot. It's kind of a plug, but just so you know, which trades breakouts using indicators. The target on long trades is 400 pips. Target on the short trade is 325. Stop loss, is the same. It's almost as if I didn't optimize. There's no break even. The RSI is a little bit faster, but we're also on a much higher chart. If you use 11 to 14 or whatever RSI on a 4-hour chart, you may not get a trade for a million years. 70-30 default there. We're still using our time exit. We don't want it to be in too long. About 5 trading weeks, and for short trades, only 2 trading weeks. The Bollinger Band you saw, trademark, on the chart was the default 20. To me, that's default. I did change the standard deviation. I wanted it to be a little bit more particular. Usually standard deviation is 2. I use 2.3. Is that over optimizing? Only you can decide. But that's what I like. I like to go a little bit above the volatility range sometimes. Well, a lot of the time. What if we look at the annual returns on this one, okay? Oh no, still losing years, but, you see they're much milder. Is that because it's a 4-hour chart? If we use a $50,000 account, almost 100%, but a lot of almost 50% winning, right? If you use a $30,000 account, obviously it'd be a much bigger drawdown percentage, but incredible returns if you use a smaller account. That would be up to you, of course, right? Now compare that to what we looked at before. Big losing year here, 3. And here's the different strategy. Still 3 losing years. Which one do you like better? That's up to you. Right, obviously less trading, no surprise there. The losing years are much milder, maybe a 4-hour. Both could be traded without a robot because this is super simple, but I would never trade it without it. I love trading with robots. We're cutting off the 4-hour trades earlier. Right, we have a target that's going to get hit most likely, 400-ish, okay? That's just the way it goes, right? If you don't like that, then obviously do something else. But this particular strategy is not trying to run as high or as far as it can. It's trying to, well, if it gets 400, that's enough for long trades, for example. Does that mean it's over-optimized? Now, here's the big reveal, I guess. What if we combine these two? In separate accounts, or if we're outside of America, trade in the same account. There we go. No compounding. On a hypothetical $50,000 account, trading 1 lot each time from 03 to 21, 412,000. The drawdown has gone up, but we've doubled our profit, right? Profit factor still looks good. Profitable trades, because we have a lot of break-even trades, right? So that's psychologically a little bit easier than that. But that's what it looks like if you combine these two. And here, look at this. If you traded these two strategies at the same time, what happened to the losing years? Well, 2020 was almost a losing year, so that's bad. I would definitely give up. I would definitely trash this strategy in 2020 because there's no reason to even trade it. Of course, it's sarcastic. And it's up a little bit so far, hypothetically, in 2021. So by adding, we've improved the annual returns. Okay, now we've gotten basically 3 different systems. We've got different time frames. We've got different entries. Okay, so even though it's the same instrument, it's very different entries, right? And we've practically erased the losing years. Hooray! But it does seem to be slowing down lately, right? It's profitable. Is that okay with us if we go ahead and make money these past 4 years? But it's not this like it was in 16. Does this mean it's broken? Did this mean it's broken? Ooh. Does this mean it? Ooh. Does it mean it's coming back around? Well, that depends on your culture, doesn't it? Or is it broken? Depends, right? Now, right? What if we take this combined strategy, this combined portfolio, and we compound? There it is. Starting with 50K, 1 lot, 2003 to 2021, $36.6 million. We started with 50, we end up with 36.6 million. It's hypothetical. Past performance does not indicate future results. It's just some guy on the internet doing a long form video. But there it is, right? Is that ridiculous? Is it ridiculous when one of my students came to me who never was ranked and never made varsity in his high school team to say, I want to turn pro and get a world ranking? Yeah, it's ridiculous. Did I say it could be done? Yes, I told him that. Did he get a world ranking? Yes, he did. So I've seen preposterous things, right? I'm not saying you could do it. These are hypothetical numbers. But I'm saying, is it possible? I mean, how do we know what's possible? It's uncertain. But compounding, if we had the right culture, that's what the numbers say. And here's what it looks like. I mean, $12 million year in 2016, another $12 million year in 2019. That was rough. That's a couple million loss, I think. Can't see it exactly. About a $2 million loss. And then it'll be up about $3 million in 2021 again. So, crazy, right? Crazy. And here's the equity curve. And we started with just a mere little 50 over here, and then that, whether you believe the numbers, whether the numbers come true, this is what we're talking about. This is the culture. Long term to get to here. Not, I want something that works right now, right now, right now. Long term. All right, let's wrap it up. Who is this for? This is for long-term traders. A short-term trader won't make anything close to the end of the finish or the finish line, right? A short-term trader would never make it to the end of even the time exits, okay? It's for confident traders. And confidence, not cocky, but you have to believe in the enduring nature of trends or this won't make sense to you. You have to believe in a culture of patience. Index funders love to say, ooh, I'm patient. Homeowners, cryptos, they're all patient. Why aren't we? And this is for long term. It's not going to happen overnight. There's going to be a lot of rocky roads in between and a lot of losing. You'd have to be committed for multiple years, not for a few trades. Okay? That's the video. Hope you liked it. I'm trying to give you creative solutions. It might not work, but it also might give you the idea that can change your financial life, which would change a culture, which would maybe make the world a better place. Oh, that's nice. All right, that's all for this month's video. I'll be back next month, the weekend of the next month, to talk to you again. Bye for now.